Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 20 of the Forex market review. Today we're going to take a look at some news coming up. So we're going to jump up, look at the news just for a bit of a change, and then look at two currency pairs. Let's jump to the news. Here we are on the daily FX calendar. For some of the new people out here, you might have not noticed me use this daily FX, but in the very early videos, we use this daily FX calendar website quite a lot, and everybody pretty much is used to it now, but I'll just run through it again. We go to the dailyfx.com, select on the calendar, and then we go ahead and we click on the drop down menu and you change it to your local GMT time. I'm using +10 for the eastern states of Australia. Then you can see all the news which is occurring for each day and what's coming up. The news is very beneficial so that you know which way the market may react at any specific time. So if you're on a short-term trade, you want to make sure you're aware of these announcements so you don't get whipsawed out of a trade. What I like to do is click on the filter and go ahead and just remove any of the low importance news. I'm really looking at the high importance and the medium importance news coming up. You can click on the weekly view. If you click on the weekly view, it will go ahead and drop out every news for the entire week. So as you can see, on Monday some news have come out, and it also shows you the countries which have holidays. We won't go through all of these news, but pretty much you have a forecast date and then the actual date. So actual percentage. So what happens is if the forecast is if the actual date is better than the forecast or worse than the forecast, that will drive the market either way. So just predict something like you're going to the shop and you're expecting to pay $1 for milk, and you go in there and it's 90 cents. Of course you're going to be really happy, you're going to buy a bit more milk. But if you go there and you find out it's $1.20, you're not going to be happy. So that's pretty much how the market reacts. So if we look at the news coming out for today, Wednesday the 18th of May, we have some announcements that have already come out. And what we saw is the pound GDP numbers come out, and the forecast was 0.3%. It came out at 1.7%. So that was better than expected, a lot better. And so therefore the yen pair would have strengthened. So if you're trading any pair against the yen, say you're trading the Aussie yen or the USD yen or even the pound yen, then obviously those pairs would have weakened as the yen strengthened on that news right there. So if you were looking at longing those positions around about 9:50 Australian Eastern States time, you would have wanted to be considering getting out of the trade, moving your stop loss to break even, or being ready to ride the wave which may have occurred on that announcement. Other news announcements coming up throughout the day. We've got the pound unemployment numbers coming out at 18:30 Australian Eastern States time. See if the employment rate changes from 5.1%. And if you're going long, obviously you want to see some better than expected unemployment rate numbers. And then moving our way down, we have some high importance Aussie unemployment rate numbers coming out on Thursday. So we'll look at some of the Aussie announcements and the charts today. And we've got some CAD CPI numbers. So that's just some of the high importance news. But again, use this website, www.dailyfx.com/calendar, and then look at when the news is coming out, and then make a decision if you're in the trade, what you want to do with that trade. So while we're there, let's jump across to the charts, and we're going to start the day on the Aussie USD. As we like to do, we're starting on the daily time frame today. We look at the largest AO. We know that identifies the wave 3. So we'll just go ahead and we know we're in a wave 4 movement back down. So wave 3, follow back to the beginning, roughly around here. That's the start of our wave 3 right there. Then we can see 1 and 2. Not always can we see 1 and 2, and we don't really care about 1 or 2, The main thing is we care about seeing wave 3, and that's always the first largest AO movement. So you can see these little ones. Now you can see this large AO. When it comes back below the zero line, which it has about here, that's when you go up, look left if it's going long, and find the highest point. So move up for 1, down for 2, up for 3, down for 4. How far will it pull back? Well, from the beginning of wave 3 to the end of wave 3, roughly around 50% is where we look at getting into the market. It can trade anywhere between 38.2 and roughly 61.8%. The main rule of thumb, it can't enter wave 1 territory. So this whole movement here is wave 1 territory. So if it was to fall below these lines, somewhere a little bit lower, probably another, we're talking another at least 50 pips below its current lows. If it falls down into these levels here, then the wave 5 move higher would be cancelled. So at this time, it's still valid. Looking left, using the dynamic support and resistance indicator, we can see some resistance areas which become support when they come back to retest. So round about the 61.8 fib retracement level, we also have a horizontal resistance area. We then drop down to the 4-hour chart, and we're looking to see if we see any divergence. And as we can see divergence. It's not clear divergence because it hasn't come back above the AO, above the zero line, but it's nevertheless, it's still divergent on this time frame. Lower low in price with a higher AO. So that's a pretty good sign that this wave 4 is ending on the Aussie USD on the daily time frame. We have our 1, 2, 3, possibly it hasn't come back just now, could be going up for 4, maybe do one more move lower, but we would really need to break out, and really above these levels is where it's first considered to be a breakout, because it's still stepping down at the moment. It's making lower lows and lower highs. It's got to break those highs. The 1-hour chart is showing us clear divergence. So again, we can just drop those in, lower low in price, but clear divergence this time because it's back above the zero line before it makes a higher low. So that's a good sign that it possibly is ending. So if you're looking at trading this in the market moving forward, around about these areas may be an idea to get in. I probably want to see it break those highs around about there, come back, retest it, enter the market, put your stop loss maybe about 100, 150 pips, and probably try to ride it maybe 200-300 pips. Easily you should be able to make 1 to 2 risk to reward. Not saying you will, but obviously using your own trading strategies to get in and out and making more than what you are risking to lose just means you can have a lower percentage risk to reward rate. So a 40% risk to reward, only winning 4 times out of every 10, you can still make money as long as you're going for those targets. And the last thing we want to do is just predict if it was to move higher, where we think it would go. Again, you can go the beginning of wave 3 to the top, bring your Fibonacci expansion tool this time, not the retracement tool, and you can see expansion roughly around those levels up there. But always look left, and you can see using the DSR indicator, or if you're unsure, just look to see where it's bounced a few times, and you might want to go, okay, it's bounced there, bounced there, bounced there, bounced there, and so on. You might want to look at getting out there. That's the reason why if you're risking like 100, 150 pips, you want to go for 200 to 300. So I'd be looking at something like that, but also watching divergence on the lower time frame as it steps up to give me my inkling of getting out. We'll jump across to the pound Aussie. It's very similar, obviously, but just in the reverse direction. That was the Aussie against the USD, Aussie falling. And we're looking for that pushback higher, and now we're pound Aussie. So if the Aussie strengthening, we will see the euro, the pound weakening. So yeah, so that's why it's reverse direction. Again, pound Aussie USD, pound Aussie daily chart, my error. We can see the largest AO down the bottom. So we're looking for this pullback higher, and it's done a nice pullback. Look left. Remember, always look left for support and resistance areas. You can see if you don't have this dynamic support and resistance indicator, you can purchase it on our website at www.saneinvestmentsolutions.com. Otherwise, just look left to see where it's bounced a few times. That's the easiest way to pick it. Obviously, it takes a bit of time to learn, but that's where it is. During the week, I gave a Twitter announcement for this one that could be turning. So roughly, you can see the two resistance areas somewhere in there. We drop down to the 4-hour chart just to see how it's going. We can see this large AO. So it's very likely this is 3. It could have a pullback for 4 and a little pushback higher again. But we are starting to see divergence on this time frame. Again, lower AO as the price steps up. So higher high in price, lower AO. That's how we determine divergence. But we also want to look at one more time frame lower, drop it down to the 1-hour chart, and here we can see higher high in price with the low AO, and it's clear, where on the 4-hour it wasn't clear AO because it hasn't come to zero line just yet. On the 1-hour we have clear, back below the zero line and then back up again. So there's your divergence. So that's a good sign to me that it's within these horizontal resistance band. We're seeing divergence on multiple time frames. So I'm saying to myself, let's look at getting in. Where would I like to short it? Again, it depends on your rules, but you really want it to break down, probably break through this support area, retest it, and then go short. Looking to risk probably maybe 250 pips to make at least 500 to 750. Where could we think it coming back? Again, if you're unsure, from the lows to the highs, use your Fibonacci retracement tool. If this is a wave 3 pattern, look at getting out somewhere in this banner here. Do we have any support areas? Again, look left. We can see one around about there, one over there, so somewhere in there. So that's where you'd want to be considering to getting out around there. So if you're seeing a pullback and you're making 1-to-1 or 1-to-1.5 and you're going for 1.2 and you're noticing these divergence patterns, it's a good sign to get out. Hitting support areas with divergence is a good sign to pocket some money and leave some on the table for somebody else. You don't have to get greedy in the market. We just want to make more than we lose. And so that's pretty much the chart for today. So thank you for that. I hope you enjoyed week 20 of the Forex market review. I wish you all the best in your success. Take care. Bye-bye.